Evening all. Welcome to tonight's meeting of the Audit and Governance Committee. As you know, we are in a period of Ramadan. Some councillors will wish to open their fast at the appropriate time, which this evening is 6:14. The meeting will be paused at the appropriate time for 10 minutes so that those members who wish to may open their fast and for prayers to be said. Fruit and water is provided outside the council's chambers. Members and officers in attendance in this room, please remember to switch microphones on when speaking and speak directly into the microphones and switch off when finished. Reporting officers joining by Teams, please switch cameras and microphone on when speaking and off when finished. Use the hands up icon in Teams to indicate a question or comment for the chair to invite you to speak. The meeting this evening will be live streamed and a recording of the meeting will be available on the council website within 24 hours of the meeting. Any exempt items on the agenda at paragraph 14, the chair will move the Local Government Act 1972 for the meeting to go into private and the live stream will be stopped. There may be a short delay before those items. I just want to welcome our independent members. Can I ask the independent members to please each turn on your mic and introduce yourself? And I think it would be, you didn't know this was coming, innit? But anyway, do a little short introduction of your background, please. Over to you first, Helen.
Thank you very much. No,
that's okay.
It's good to meet you all. Hello, I'm Helen King. Until recently, I was the Chief Finance Officer and Section 151 Officer for Northamptonshire Police, Fire and Crime Commissioner, so for the police and for the fire. I'm currently now working as an Efficiency Associate for His Majesty's Inspector of Constabulary, Fire and Rescue Services, and I sit on a number of audit committees and finance boards, and I'm delighted to meet you all and be here today. Thank you.
Good evening, everyone. My name is Niaz Chowdhury. I'm a Chartered Certified Accountant. I'm in practice since 1993, and then I did my accountancy qualifications, and I have worked with many organizations, including public sector, private sector, KPMG, and the latest work I did with a government internal audit agency as their senior internal auditor. And then I worked with another organization for a fixed term contract. It was as audit manager, internal audit manager for a pensions group. And I've got my own accountancy practice, and I'm involved in various organizations, like voluntary organizations for community services. So nice to meet all of you, and I wish to see you again in future and work together. Thank you.
Thank you. Thank you for the introduction and welcome and joining the team. Look forward to working with both of you. Right, apologies for absence. Are there any apologies for absence?
Thank you, Chair. We've got apologies from Councillors Farouk and Councillor Javiva Hussain.
Thank you.
Chair, sorry,
yes.
Councillor Scappable.
And Councillor. Thank you, Councillor Underwood. Right, if we move on to agenda item minutes of the meeting for the 12th of December. We're going to go through it for accuracy, and then we'll do approval. I think most of the stuff that is in the minutes is picked up in the agenda. Yeah? Right, so if we go to page 5 for accuracy, is there any errors there that need to be changed? Colleagues? No? Page 6. Page 7. Page 8. Page 9. page 10, page 11, page 12, and page 13. Colleagues, for those of us that were in attendance, do you agree that the minutes are true and accurate records of what took place? Yeah. Okay. Thank you very much. We now move on to disclosures of interest. Members are reminded that they must disclose both the existence and nature of any disclosable pecuniary interest and any personal interest that they may have in any matters to be considered at the meeting, unless the interest is a sensitive interest in which event they need not to disclose the nature and interest. I won't read it out because it's before you in your papers, members. Right, we're going to now move on to, are there any disclosures of interest? No? Right. Item 4, Section 106. Those items on the agenda affected by Section 106 of the Local Government Act 1992 will be identified at the meeting. Any members so affected is reminded that they should disclose the fact and refrain from voting on those items. Item 5, urgent business. Can I now hand over to the Section 151 officer on that one, please? Any urgent business there? No? Okay, then. We're going to do reference from the committee and other bodies. Are there any reference there? Right, we're now on to reports. We're on to item 7, shared anti-fraud services update. Over to the head of SAFS.
Good evening, Chair.
Evening. Yes.
At the same time, if they wish to pray, they can do that. Well, let me repeat then what I said. I said we got about four minutes of vote. So rather than start officers starting and stopping in 4 minutes time, 4 or 5 minutes, why don't we just stop now and give the colleague that are fasting to break the fast, and if they wish to pray, they can do that and come back and join. So about 15, 20 minutes break. That's what I'm suggesting.
Is everybody in agreement to that? Yeah?
If
Okay.
we don't, we'll go anywhere.
Okay. Can we stop the recording then? Or do what we're going to do? We're going to stop the recording, are we not? Okay. Okay, so if everybody just go on camera and turn the mic off, and we'll see you on the after our colleagues break their fast. Thank you for your patience. if we can recompose ourselves, colleagues? We got Nazi's on his way back, but we are core now, so we need to just get on with business. And I'm conscious, I'm not sure where everybody's travelling from. So if we can now go to item 7, please. Thank you.
Good evening, Chair. Good evening, members. For the sake of the record, I'm not the head of the Shared Anti-Fraud Service. I'm a counter fraud manager there. We're a very busy time of the year across many of our partners, local authorities appearing in the evening, so we're sharing the load. My name is Darren Bowler, for the record. Nick Jennings sends his apologies, but he cannot physically be in 2 places at once. Chair, I'm going to take the first report has been read. It is an update on the work undertaken on the plan for this year. The final report for the delivery of the plan for this year will be in the new financial year, potentially at the first meeting where we appear. So some brief highlights from the update on the plan. So as well as awareness and prevention being delivered across the council, core work has seen 217 referrals into the Shared Anti-Fraud Service for investigation, and that is in the period April to December 2023, to which all the figures in the report relate. 126 of those referrals were from the public, and 71 were internally received. We carried over 40 live cases from the previous financial year, and of the 45 live cases, the current estimate as of December, the current estimated loss of saving exceeds £764,000. A total of 99 cases and reviews have been closed within the year so far to December, with combined losses and savings of over £403,000. For the definition of a fraud loss, please see paragraph 17 of the report. 9 tenancy cases have led to the recovery of a social housing property, which are back in stock. 11 tenancy fraud cases are currently live as of December. A long-running case has finally been concluded. The primary investigation was undertaken by Bedfordshire Police with substantial support from both our service and the audit team here at the council. And that recovery is now being finalised and retrieved, which is £97,000 coming back to the council this financial year. The latest National Fraud Initiative work has been undertaken, and there has been a substantial effort across all services at the council. The work undertaken by the teams has supported by the audit team here and my service as well. From almost 6,000 matches, savings and loss in excess of £987,000 have been identified, and that's error as well as fraud or irregularity as well. And that's across all services and departments and very wide variety of matches. The credit for that work goes to all of those people from the individual services that were carrying out that individual work with the support, as mentioned. SAF's led on a pilot project from the Cabinet Office to identify and intervene as early as possible with potential tenancy fraud. This work continues and will be reported on at a later date. Unless there's anything in particular councillors wish me to address, that they are the highlights, and I'm happy to take any questions.
Colleagues, are there any questions?
There's nothing in terms of, or have I missed it here? Have we got any, how many people were prosecuted through the court? Or is it just the numbers you got is people that have been caught doing the fraud?
That will come with the full report at the end of the year. This is just an update of where we are currently, and prosecutions are underway, and we may have some results for you at the conclusion of this financial year.
Could we have that information, please?
I can come back to you, Chair, and provide some more detailed information about how many prosecutions are currently being run and what position they're in.
I'm asking for Chair, those that have concluded, not the ones that are still, going through the court process. Concluded, yeah.
And yes, and just to clarify, when you say prosecutions, Councillor, you mean going to court and being prosecuted at court?
Yeah.
Yeah. Okay.
Thank you. Yep.
Thank you, Chair. I just wanted to ask about the days, and I think in the report it says there's 710 days exclusively for the council, but in the appendix says 437 have been recorded so far due to staffing issues. Have those staffing issues now been resolved, or are they a concern moving forwards? It links into the next report for me. That's what I'd ask.
They have been an ongoing concern, and I think that's an experience with many people in the public service. At the beginning of this year, you won't be aware, we changed how we worked. So previous years, we've had a team of people dedicated to each of the partners that we work with. And that team would deal with very complex matters and very simple matters. But that caused a problem in that the more complex matters were the ones that had a need for some urgency and more work was involved. And so the less important matters, if I can put them that way, because they're all important, did not get the traction that they needed because the other ones were more urgent and needed to be dealt with. So this year in April, we moved to a different model. So we looked at dealing with matters on allegation type. And so we divided the team into what we call volume and complex. Volume is the team that deals with housing, council tax, and no complex matters so that we can progress those evenly. And that the more complex matters would deal with a smaller team that weren't troubled with the other volume matters. That has worked to a degree, but across all of our issues, we've had some long-term sickness and replacements of people that we lost the previous year. So we're inducting new people. So we are up to strength. It's just that some of those people, unfortunately, have been unwell and not been able to be at work, and others are new to the service. So their work rate will take some time to improve. So we've been at full numbers, but not at full working capacity, if that makes sense.
Any more questions on that? Councillor Malik?
I have a question. What type of action are you taking to control frauds for 2024 to 25? Secondly, what type of frauds are very common? What type of strategies are you doing to control those frauds?
I'll deal with the first point first, if I may. The report that's coming, it will deal with what's happening in 24 and 25. That's the outline plan for how we propose to deal. In many ways, it's very familiar to the plan we have now. So the second point was what's common in numbers. Volume we see because we have a lot of people that pay council tax. We see lots of council tax issues. We deal with those in many different ways. Some of them are less serious than others. So we have different compliance models at one end and more investigation and prosecution options at the other end. And that often will include working with the DWP. So we'll joint work on the council tax side whilst they're working on the housing benefit side, which also has an impact on the authority as well. So we can join up with that. So I would say in numbers, volume, council tax is probably the highest one that we deal with, but they're not the most, in volume, they could potentially be quite high harm because many low value equates to quite a lot of value. Tenancy fraud causes us some issues of concern, of risk, because whilst they may not be in volume, they are lengthier investigations generally. and they can amount to quite some high value losses to the authority. And that's not just where if someone was subletting a property and that property is out of action for the right person, you've also got someone in TA. So if it was not being occupied properly, we could take someone off the TA, which is costing the council lots of money, and move them in. So they're fewer in number, but can raise more loss in the terms of revenue and expenditure for the council. So very difficult to quantify, trend. The other trend we're seeing at the moment is mandate fraud, which is very simply explained by unexpected emails from suppliers who are suggesting that they've had their bank account details compromised. Can you change the bank account? And by the way, can you pay the rest of our invoices to this new bank account number? Clearly not from the supplier, and that is becoming increasingly sophisticated. It is not as straightforward as I've just explained. We're looking at hacks into email systems, both internally and externally across the country. And within the partnership, we are seeing people affected in that same way already as well. So the technical ability is outstripping the awareness of it on a local level. So that for us is dangerous. It allows it to go undetected for long periods of time, and the loss can be quite large because of some of the contracts that are involved. So there are lots of trends, there are lots of different crime types, but they all have their own significance in terms of importance and how we deal with them.
Hey, Councillor?
I agree with you, it's a lengthy process, but the thing is that do we have any plan B to control this immediately? Because if we are going this lengthy process, is going higher and higher and cases are going very higher. So how can we control it? So that is the question main.
So strangely today, I was with the audit manager and the training manager for Luton, because one of the biggest ways is going to be prevent. The prevent element has to be rolled out for everybody. And so there was a long conversation this afternoon for the training plan for next year, which we'll be delivering as part of the next plan. So there's the first step, is to prevent. One of the other steps is to pursue. The difficulty with pursue is you can spend a lot of money pursuing people through the courts, because it's the council's legal team that picks up that bill. We don't go to the Crown Prosecution Service and get prosecutions for free. So we have to be wise and very appropriate when we consider prosecutions, because it's almost like throwing good money after bad. If we've lost some money, we're going to have to spend money to recover that. And is that appropriate to do so if we know we're not going to recover that money? It adds a very good deterrent effect when it becomes newsworthy and in the press, and we push for those press releases, because the wider public opinion is very necessary. And I'm assured by the number of referrals that I mentioned just a moment ago that are coming from members of the public. Clearly, the public have confidence, and those public referrals are growing in number year on year. And that gives us confidence that the public have confidence within the authority to deal with allegations of fraud appropriately. And that's why we publish good results in relation to prosecutions that we do, but we have to be very careful about how we do that. We cannot prosecute ourselves out of a problem of fraud. It's just not going to be effective.
Councillor? Thank you, colleagues. Are there any more questions? No? Okay. So with this agenda item, the committee is recommended to note the progress made by the Shared Anti-Fraud Service on delivering the 2023-24 anti-fraud plan. So noted. Agreed? Thank you, colleagues. We now move on to agenda item 8, SAFS anti-fraud plan for 2024-25. Over to you.
Thank you, Chair. This plan is the result of engagement with the service heads and directors across the council and has been subject to review at the CLMT. The plan sets the strategy, identifies responsible officers in delivering the plan, including the role of this committee. It also sets the KPIs and standards of service for the following year. The work plans and projects for the year can be seen at Appendix A. The areas where we will deliver specific activity agreed with service managers is broken down on pages 29 to 31. Chair, I've deliberately kept that brief because I'm anticipating that everyone has had a good opportunity to read the report and will be asking some questions.
Colleagues, any questions with regards to the report? No, I think I've got one, and that was with regards to page 32. SAFs will continue to develop with the Cabinet Office and Council Officer a data matching solution. I just wanted to know, how is this coming along? Are you going to start it from April? Thank you.
Chair, it's been in place for a little while, and that refers, I've mentioned earlier, the National Fraud Initiative. Using the very same data and similar tools, we have a local fraud hub. So that's all of the partners of the Shared Anti-Fraud Service data deposit their information into a local hub, and that information is exchanged. It's matched against the same data for the national exercise and also local data as well. So that gives us a much faster turnover of data in a shorter period of time. So when we talk about the National Fraud Initiative, which I mentioned in the last report, that's nearly 6,000 matches. That's an awful lot of work. And as I mentioned, credit is due to those people that conducted that this year. It's immense to get through 5,000 matches. Can't do that regularly. That's why it's every 2 years. But what we can do is be selective in the matches that we do put up. So there's a conversation at the appropriate level within the authority to decide which matches are we putting up every 3 months. So we put up less volume, we match it, and that hopefully brings back the results and we stops the problem earlier. So we don't have a distraction of resource from core business to process the results that are coming out. If we're doing it quicker, that means we're saving more money. If we're doing it more regularly, every 3 months, that means when it comes around in 2 years' time and it's run again, the matches should be cleaned, because what we're putting in to the National Fraud Initiative, or what we're putting in the local fraud hub system, is being replicated in the national system, and that cleans that data. A lot of the issues that we have with big data sets is data cleansing. So if we can make the data that we send better, because we've spent 2 years going through our own data and then uploading that to the national data, when our data, Luton's data, goes off to get matched into the national system, we're matching good data with everybody else's data. So we should have less than 6,000 matches next year and be in a better position to resolve that quicker and put the system right. A lot of it is error and irregularity. We need to get that put right, because that still causes loss to the authority, but we also need to identify that fraud a lot quicker. So the fraud hub is the way to do that and to be benefit for the national initiative in 2 years' time.
These are KPIs, so these we'll get an update by this time next year with regards to this, on these elements here.
So we have 3 appearances at an audit committee. So we're at the end of this financial year cycle. So this is an update on what we've done so far. And then next appearance, you'll get potentially an depends when we appear in the system.
In the cycle.
Yeah, the cycle. So
yeah,
if we're here in in May, we will have only done 2 months. We may be able to give you a very brief update on what's happened in that period. But the reason for being here in May is to tell you the final results of this current year's work. So and that's when that happens. In the second appearance, which was usually around the summertime, late summer, early autumn, we'll give you an update of the performance for the year, and then this time next year we'll be doing the same again.
Okay, thanks for that. Thanks for that clarity. Yes, Councillor. Yeah.
Thank you, Chair. Top of page 30, there's a two-line item procurement. So it's saying that a bespoke risk assessment is being developed. Could you go into a bit more detail about what's involved in that? Oh, sorry, it's page 6 of the appendix. Yeah. It's a yes, Chair, page 30 of the pack. Yep. Yep.
Page 6 of 10, yes. So procurement, work with the internal audit and procurement service in developing a bespoke risk assessment for fraud in procurement contracts. Yes. So as part of the reorganisation, we of the team that I briefly mentioned earlier, we have a dedicated officer that deals with areas of risk management. It's a little bit wider than that, but what he's going to do is meet with the internal audit team, work out where internal audit's view of procurement risk is. Procurement is dealt with in the main in individual teams. So I was aware that there was a particular lawyer to deal with procurement contracts. I'm not sure if that's still in existence currently in the setup. So we need to identify our contracts being reused without then going back to legal, because it's very easy to take something off the shelf, but it's been off the shelf for 3 years. We need to know, is that a risk? Has the legislation been updated? Is it still relevant? Does it take account of those things? So it's a cradle to grave review of what is the process for a procurement process within the organisation. Now, that may be different from the different service areas that we look at. So is there a corporate policy? Are the teams following a corporate policy? We're asking the questions because we don't know. So he's new in post for the risk area, and that's his project here for next year.
So what is your experience with other councils in this area in procurement and the risk of fraud?
I have a personal view about procurement fraud. Generally, that personal view is that we see headline big numbers, and that's because big contracts may be suffering very large amounts of fraud. The majority of issues with procurement contracts in the volume where we're not talking hundreds of millions of pounds, and we're talking 10s, 20s and 30s and 50s and hundreds of thousands of pounds maximum, is that there's non-compliance quite often. And that is the bigger issue that we will be addressing. So we're not suspecting that there's any suggestion of fraud. We're going to look at to see, is the policy being looked at by the people dealing with procurement? Are they applying the policy? Is it being applied in the correct way? And do we have assurance across the whole of the authority for the different areas running procurement? So it's a headline grabbing issue. We're not seeing it as that at the moment, but then we haven't started that piece of work. So when we get into that piece of work, we don't know what we're going to find.
Okay, Councillor. Right, unless there's any more questions, hope our colleague is all right. The committee is recommended to review and approve the anti-fraud plan for 2024-25. Is it so approved? Yes? Thank you.
Thank you, Chair. Thank you, members.
Thank you for your attendance. We'll now move to agenda item 9, corporate risk register. Over to the audit manager. Thank you.
Good evening, everyone. The corporate risk updates is in 3 parts this time round. If I may just spend a few minutes just to summarise each part, and then I'm happy to take any questions on that, Chair. The first part covers the findings from the World Economic Forum on the current and emerging global risks, how these align with the risks currently reported within our corporate risk register. So in September 23, the World Economic Forum carried out a global risk perception survey over 3 timeframes. It covered the current timeframe in 2 years and over the next 10 years. The survey highlighted that environmental risks, in particular extreme weather events, dominates the risk landscape in all of those 3 timeframes. The societal polarisation featured among the top 3 risks over both the current and the next 2-year timeframe. The cost of living crisis, cyber attacks, remains as a major area for 2024, and technological risks in relation to misinformation and disinformation is considered to be a major area of risk over the next 2 years and is seen as the most severe global risk. A comparison of these risks to what's on our corporate risk register at the moment identified that, with the exception of the risk on misinformation and disinformation, all of the other elements were covered, and an update has been provided within the report in terms of those links and the control measures in place to manage those particular risks. In relation to the misinformation and disinformation, that particular risk has been added to the corporate risk register, and it will be continuing to be monitored as it is perceived that the risk is likely to be increased as time increases. The second part of the report covers the Council's risk appetite statement, and the committee is recommended to review the statement to ensure it remains current. In June 22, Zurich were commissioned to assist the Council to develop our risk appetite statement. They engaged with senior officers and members for their views on risk, and they produced our risk appetite statement. This subsequently led to a defined statement around each category of risk and an overall risk appetite statement. Since then, these statements have been approved by this committee, and they've also been incorporated within the Council's risk management strategy. The third part of the risk update provides an update on the current corporate risks on the corporate risk register. It includes an update on where the scores and assessments have been reassessed by risk owners, if there's been any changes in the risks and any withdrawals in the risk from the risk register. For example, there was a duplication in cyber risks. So to address that, 2 of the risks in relation to cyber risks have been closed on the register with the aim of one overarching risk which will cover that area. There are currently 4 high priority risks on the register, and these are detailed within paragraph 26 within the report, and an update on the control measures in place to manage these risks. In summary, these 4 high priority risks relate to failure to keep to the approved budget, failure to recruit retained staff, the current demand profile, poverty in Luton resulting in overspend, and this is to do with homelessness, and the failure to improve and decline the look of the town centre. I'm happy to take any questions on that report, Chair.
Are there any questions, colleagues? Councillor Hussain?
You've covered it probably in terms of the risk, cost of living, and homelessness. Yeah, I mean, that's one of the biggest one, and we don't know at this stage where the figures are going to go. I mean, at the moment there's an increase, but that increase is likely to go way above. It's not just locally, but nationally. So unless the national government takes that, into consideration, I was listening about Hastings today, and they are completely very close to getting completely out of hand. So are we taking that into consideration, because more and more people are likely to become homeless because the rent that they can't afford to pay?
Okay, so on that one, I understand from the risk owner that they will miss the target that they've set for the homelessness target. They will be carrying out additional work, I believe, with our transformation partner, Human Engine. So they will be looking at this particular issue and seeing how there's more oversight to the challenges being faced. So it is something which is in the pipeline and being worked on. Thank you.
Any more questions? Yes, Councillor. And Helen, yes.
On page 41.12, it mentions horizon scanning. What is horizon scanning?
So with the horizon scanning, this is where we would look at various other sources. That there could be articles, various networks that we may attend, which would kind of identify, well, these are the key emerging risks that we need to take into consideration. So it's just having an oversight in terms of what's emerging and taking that into consideration to see how will that impact us and the council. Thank you.
Is that okay, Councillor? Any more questions?
It is. So the report is we're considering the findings from the World Economic Forum on current and emerging global risks and how these align with our corporate risk register. So what prompted us to do that work?
So we have a look at do a gap analysis on our corporate risks, just to make sure that our risk register is current and it reflects the key areas that we need to be focused on. The senior risk officer attends regular meetings, and she was aware of this report, which had come out recently. So we use that as a basis to carry out this year's gap analysis.
And do you think it was a worthwhile exercise to do this?
I think so, definitely, because there was a risk which we hadn't included around the misinformation, disinformation, which is likely to grow. So we've got it on our horizon now, and we'll see how that will impact various different services across the council. Thank you.
Is that okay, Councillor? Helen and then Naz, yes? Helen first, thank you.
Thank you. I thought it was a good report, and I really liked the World Economic Forum. I found that really interesting. Just one small question about the corporate risk register, and it might be more relevant after item 12, was whether anything in relation to the statement of account should be reflected on the risk register and the position regarding that. But it might be more of a conversation after item 12. So it's just to lodge that one.
Come back.
Yes, of course, it's something we can discuss on that and how that reflects on the corporate risk register.
Thank you. Yes, over to you.
Thank you, Chair. I found that it's a good thing that the system is flagging up the issues. Those are like when they're due for reviews, so that they can be reviewed by respective people. How frequently the risk management strategy are reviewed? Number one. Number two is how often the risk appetite statement is reviewed, and then how often the corporate risk register is reviewed. And the next one is more to like financial statements issues that I've come across, but there are some risks which are financial risk and operational risks. Are they properly, the key aspects are identified? And if they're identified, then how come, like, in past, in 18-19 financial year, the financial statements are materially misstated? And on page 64, safeguarding vulnerable children, what are the control measures for those, please?
If I may take your first questions around the policy review. So normally they're reviewed and updated every 2 years. So that'll be the risk appetite statement, which now forms part of the risk management strategy. So that will be reviewed every 2 years. In relation to your questions around the risk around the financial statements around that, I'd probably ask Dev to you'll go through that later. Okay, so Dev will probably answer that around that. In terms of I suppose that the corporate risk register, we tend to report that on a quarterly basis, but the risk owners do review their own risks on a quarterly basis. So they would go in once they receive the notification on the risk, and they would update the risk register on the system in terms of whether the risk is still current, the score is still reflective, or if there's been any changes in the control measure update around that. And then in terms of the reporting, we would use the information from the system to report to CLMT and to Audit and Governance Committee as well, in terms of the measures that are in place, focusing particularly on those high priority risks, to obtain an update from the risk owners in terms of what are they doing to address those controls as well. So you have more information on that risk. You mentioned something about the safeguarding of children on page 64. Sorry, I'm just going to the right. Page. Okay, so there's no change to the risk score around those. The reliance around the control measures around that would be the processes that we have in place around that. So it would be the alert mechanism in terms of how that is working, the referral process, if there are any concerns being raised, and how are those processes being implemented and policies and procedures being followed by staff to kind of address any concerns which may have been raised, and then also having those working with partners to ensure that that the appropriate measures are in place to safeguard vulnerable children as well. So again, it will be the processes around that which would to see if those are operating efficiently to kind of meet that risk. But I think it is scored as a medium-high risk, so it is something which is on the it is a significant, is an area which is constantly under review as well. Thank you.
Okay, colleagues, any more questions? Right. On page 35, the recommendations are for the committee as follows: to consider findings from the World Economics Forum on current and emerging global risk and how these align with the risk currently reported within the corporate risk register. To review the Council's risk appetite statement to ensure it remains current. And number 3, review the updated corporate risk register. Do we recommend? Have we done that? Yes? Thank you, colleagues. We now move to agenda item 10, internal audit plan. Thank you.
Thank you, Chair. So the internal audit plan update report provides an update to the committee up to December 2023. At the moment, as at that point in time, we've achieved 60% of the plan. So as reported previously to this committee, we are currently below target to complete at least 90% of the plan by year end. Our aim is to achieve between 80 to 85%. This is mainly due to the vacancy within the internal audit team and 2 members of the team being on maternity leave during last year. We had recruited to the vacancy earlier in the year, but unfortunately this post had become vacant again. Again, it has been a challenge to recruit to our senior auditor vacancy, mainly because of a shortage of skilled internal auditors and competition for local talent in the local authority market. However, since the last update, I am pleased to say that we have now recruited to this post as a secondment opportunity. So, we will be taking the opportunity to train somebody up on this particular post. In the interim, Ms. Ours are also completing some of our specific audit reviews to assist to make up some of the shortfall in the completion of the audit plan. Our focus will be to focus our existing resources to ensure all key audit reviews, particularly those which have been identified as high priority and feed into the annual audit plan, are completed. As at the end of Q3, we had issued 41 reports, and of those, 2 were limited assurance opinions. An update on those 2 limited assurance opinions are detailed within the report at paragraph 15. The first is to do with the bank reconciliation, and this is mainly to do with a system functionality issue in the daily reconciliations. It's an issue which has been escalated to the IT provider's divisional managing director to resolve. But in terms of the reconciliations and the accuracy, I have to say that there are no issues with the monthly reconciliations around that. PCI compliance was the second audit which we issued a limited assurance opinion on. And again, in terms of an update, we've been informed by officers that the majority of the recommendations have now been implemented. Management have been actively working towards achieving compliance, and following successful system tests, they have agreed a procedure to ensure that telephone payments are now taken compliantly. and that's being rolled out to other council services. In terms of follow-ups, 57% have been fully implemented, and management have confirmed that a further 33% are in the process of being implemented. I'm happy to take any questions on that report, Chair.
Any questions on the report? Yes, Councillor. And then yes. Thank you.
Oh, thank you. Page 91, Kanchan says product and process efficiency section. It's talking about the staffing problems that we're having. It says we are currently considering alternative options to fill this post. What are those alternative options?
So this was the secondment opportunity. So at the time the report was written, we were looking at the internal secondment opportunities, and we were kind of in the process of interviewing. But since then, we just had the interviews on Monday, you see. So we have actually appointed to that post now, and we're looking to use that secondment opportunity as a way forward to dealing with our recruitment issues.
Okay, so this is someone being seconded from another organisation?
From internally from another department.
Oh, okay, right. Thank you.
Thank you.
One more. On the next page, compliance with professional standards. That's the target is 100%. Is that 100% compliant? Does that mean that we've hit that target? That's not the target. That's saying we've met the target. Is that right?
Yes, that's right. So we had SIPFA do an external assessment in March 2023, and they confirmed that we comply with those standards. There were some areas where they made recommendations, which we have worked through to implement as well. In terms of the standards as well, just to make the committee aware that the public sector internal audit standards, there are some changes coming this year in terms of the standards and the requirements. So it is something that we'll be reassessing ourselves when the new standards come out, just to make sure that there's no further gaps going forward.
Okay, so those recommendations that they made, does that tie into this, where it says in capital letters, generally conforms to requirements?
Yes, that's right. That's the statement that they've provided in terms of the options which were available.
Okay, thank you.
Thank you.
Thanks.
Yes. Thank you.
Thank you, Chair. I was just wondering that what was the percentage of achievement of annual audit plan in last 4 years? Is that data available from 19 to 22, please?
So last year again we were just under target, I believe. So again we had similar recruitment issues and issues with staffing. I believe the year before we did meet the target, but I can provide the details so you have an accurate picture of that over the last 3-4 years on that one.
Thank you. And one more quick question: that if there are staffing issues, is it considered that whether the vacancies, the equivalent of the days that can be kind of covered by external sources like external audit practice or anyone, so that we are not behind with the audit plan? Thank you.
We have an arrangement in place with Mazars, and they would pick up any specialist reviews for us, such as the IT audit reviews, and any ad hoc reviews for us as well. So this year they have been helping us complete some of the audits as well. Again, it's kind of limited due to their resource availability as well. So for the second half of this year, they have been providing us with a resource to be able to complete specific reviews in order to provide the annual assurance opinion. Thank you.
Okay, Helen.
Thank you, Chair. 2 quick questions, if I may. Thank you. On page 77, paragraph 14, I was interested in the split between assurance audits and other audit work, and I just wondered, is that the normal kind of proportion? Is that quite standard year on year, or were there a particular number of audit work where the assurance opinion was not applicable this year?
The assurance opinion where it's not applicable is mainly to do with the TPA audits that we do for the schools, and we've audited about 12 of them. And because it's a certification process around the Teachers Pension Agency and how have they kind of complied with the requirements to submit the data, so we can place assurance on that when we complete our TR17 return. They're the reports in relation to those. Some of these could be some specific areas where we've not covered a whole area, so it could be a certain area which we may have reviewed from a control point of view, or a specific management request of an audit which may have been carried out. So it may not necessarily fit the normal scope of an audit to be able to give an assurance over the whole of that area. They could also be as a result of an investigation which we may have conducted. So again, that opinion may not have been applicable around that because it was advising around those control weaknesses. It's perhaps looking at a specific area around those particular issues which were noted. So that's the reason why those opinions haven't been given in those instances. Again, it would be reflective of what we've done previously around the level, purely because of the number of schools that we've audited with in relation to the TPA certification work. Thank you.
Ask a quick second question, Chair. Thank you. I'd just like to ask a little bit about Appendix C, please, where it's an update on some of the recommendations. And apologies, I appreciate this one's probably got history behind it, or there's been other discussions, but I was quite interested in some of the how old some of the recommendations are that haven't necessarily been implemented, or the number where they've been partly implemented. And I was particularly interested in the building control one because it's a February 2020 and it's partly implemented, but it doesn't have an expected resolution date. And that was just the one I just wanted to have a bit more information, please.
So with this one, the actual statements have been prepared, they've been signed off. It was just waiting the publication on the council's website around that. So that was imminent, which is why there wasn't a resolution date around that one. So that now should be fully implemented around that one in terms of that. In terms of some of the recommendations, there was particularly the ones to do with implementing systems, for example, because you probably picked up there were some which were related to implementing various systems around that, and some of these were held up because of the pandemic and obviously diverting resources to other areas during that specific time period. Some of these are now back on track, and it does take some time to be able to make sure that those systems are appropriate and to kind of do those reviews, I suppose, making sure that you have the right provider who's able to kind of meet those requirements as well. In one of these instances, because of the cost implications, it was identified, well, actually, it's not feasible to actually implement that new system. So we're going to rely back on the compensating controls in place now around that. And that was to do with the implementing a cash register system, which interlinks to the booking system around I believe it was the MOT work. So when they book it in, it kind of ties in with the systems just to kind of create that efficiency. But due to the cost implications around that, it's no longer feasible to carry that forward. So we are relying back on the compensating controls in place to ensure that they're working effectively around that. Thank you.
Okay, Helen. Yeah, please, in moving forward, independent members, please do not feel afraid that you're only allowed one question. You're here to strengthen the group. Yes? Thank you. Any more questions, colleagues? So we now move on to agenda item 11. That's the Internal Audit Strategy Charter and Audit Plan 2024 to 2025. AG Claire, it says here. Over to you.
Thank you, Chair. This is the audit strategy, charter and annual audit plan for next year, and it sets out how the council will meet its statutory requirements for internal audit. The plan has been devised using a risk-based approach. We have reviewed the corporate and departmental risk registers in place. We've also consulted with service directors to understand the key risks within their service areas and the audit requirements. The corporate high priority risks have also been assurance mapped to identify those key areas of audit work for 24-25. And we've also undertaken horizon scanning to consider any emerging risks around that as well. The audit plan is also linked into our corporate objectives. So it will identify in terms of how that particular audit work will feed into those corporate objectives and also linked into the corporate risks as well. I'm happy to take any questions on that report, Chair.
Any questions, colleague? I've got one question, and it's related to the third-party audit review. Can you inform us when this is going to happen? And I think it would be really useful if those subsidiary companies in moving forward came to the audit committee, so they speak for themselves instead of you. So if you could incorporate it in the work plan. This is somewhere I've heard other local authorities do, so I'm just learning from others. Yeah, I think it would be good if the subsidiary companies come and reassure us, because we're now in some of the things we're doing group accounts to a point. So if we can incorporate that in the work plan for the new municipal year, that would be you really forward. Yeah, you may not be able to answer the question right now as to when the review, but I want it to happen in the next municipal year, please, to see them. If you can answer, that would be good.
I'll take that back to them, Chair, and we'll arrange some meetings for them to attend. Thank you.
Tell us the next meeting when the audit plan they're going to happen. Yeah, don't want that. So if for the minutes, can this be an outstanding matter that I want it clearly highlighted in the minutes, so we pick it up if I'm still chair in the next municipal year or for my successor. Thank you. Brilliant. If there's no questions from my colleagues, we have got, right. The committee is recommended to consider and approve the internal audit strategy, charter and annual audit plan for 2024-25. Do we so recommend and accept? Yeah. Thank you, colleagues. We are now on agenda item 12. If I can ask Janet on behalf of EY to come in here with regards to an update on the audit of the statement of the accounts for 2018 and 2019. Thank you.
Thank you, Chair. So our report sets out our proposed conclusion and audit report for the 2018-19 audit. We also set out a summary of our communications with the authority over the duration of the audit and the issues we've identified with the versions of draft accounts that we've been provided with to explain the timeline of those communications. If the Audit and Governance Committee approves the draft statement of accounts for 2018-19, we then intend to issue a disclaimed audit opinion. Our proposed conclusion on the arrangements to achieve value for money in place to the 31st of March 2019 would therefore be adverse, based on significant weaknesses in procurement arrangements that were present at that time, and also in the authority's arrangements to meet its financial reporting responsibilities. Our report also sets out the proposals of the DLUC and NAO consultations and our intentions regarding the open years of account at Luton Borough Council under those proposals. We have also set out the fees incurred to date on the 2018-19 and 2019-20 audits, as we are required to communicate those to you by PSAA. Those fees will then be determined by PSAA. We note that the officers' reports, two of them, make a number of statements which in our view are factually inaccurate and which we wish to bring to the committee members' attention. There are a number of places in both reports where they state that information has been provided to us, which officers maintain constitute evidence, but in our view do not meet the standard for sufficient appropriate audit evidence. There are also a number of statements which refer to a number of dates of reports or dates of meetings or assurance provided, which in our view are inaccurate. For example, assurances provided in March 2020 that the audit was almost complete. We can find no record of that on the public record. We can, however, see our report of March 2020, which identifies a number of significant areas of the audit that were yet to be concluded at that point. For example, going concern and the valuation of the airport. Those have remained areas of concern throughout the 4 years of the audit period. We note that officers have stated that updates for going concern have been provided to us and included in the narrative report. This is a clear example of the lack of understanding of the information that is required for financial reporting by the Council, because the going concern disclosures are required to be in the statement of accounts and not the narrative report, and therefore the response does not adequately address the issues that we have raised in our proposed opinion. And there's a clear lack of understanding of what was required to report on infrastructure assets, which is an area, again, which we have highlighted in our proposed opinion. Advice was brought in which does not provide further clarity or improvements to the draft accounts, which remain inconsistent in those areas. So we just wanted to make sure that those particular summary report of points was on the public record in response to officers' statements. Thank you.
Is there any more from EY at this point in time? Okay, section 151 officer, would you like to come in now?
Yeah, thank you, Chair.
So the section 115 officer, I will open it up for members to question, comment, and for our new members with new pairs of eyes, feel free to ask how many questions I was getting a bit slang there. Oh, that you would like. Thank you.
Thank you, Chair, and good evening, members. So we have been here a number of times, Chair, and at the committee, everything has been discussed, and on several occasions, we have seen the annual audit inspection letter from draft from external auditors, and the committee has been kept up to date about the progress which have been made over the last 4 or 5 years. I've got the report which I will go through, but before I go through the report, and for the interest of new members, because you are new, so that's why, because all the LBC members, they have been here before, so they have gone through the process. But in response to the point which has been raised by EY, we've got our detailed response. The EY has got their views, and we've got views on EY audit report as well. So that has been discussion going on between EY and ourselves. But what I would say here is in July, we were here and we did ask EY, and the response was everything has been provided. And those question was asked for section 157 to say, have we received all the information? The answer was yes. And to subject to take it to the standards panel at EY. So that is on record. So that was the audit committee minutes as well. So we can go in each individual what was provided, what was provided, but that was minuted. And the question was, do you need any additional information from section 151 officer? The response, no, we've got everything, so that they will go for the panel. So in my report, I will go into detail, but I don't think I will go in each individual line because we've provided our response. EY has got the response. But the one line I would say is audit committee minuted was in July when you had that audit committee meeting. The reassurance was provided that EY has got all the information. And I will go into a couple of points and I will take you through the process just to say why we are where we are. Because for members, you've raised the point about risk and about financial statements. So once I've gone through that, then I'm sure EY will have their own views on what explanation I have provided. But we can always go of the 4 years we have been discussing in detail. We can spend hours and hours, but I would try to just put the major events, the major milestone, and why we are here we are. So if that's okay with Janet, or do you want to come back on my response?
I would just say that your point about what was minuted, Dev, was in relation to what our formal report stated, which was it was very, very clear where the outstanding areas were in the audit. And that was the point of the formal report, not a conversation about whether or not, as you state, I was asked, had I received everything? I had received everything other than what was reported in my report. And what we were then going to do was go to consultation. So if you read the report, it's crystal clear that the going concern areas needed to be updated, the financial statements needed to be updated, and there were certain areas on infrastructure which we had raised with you that were not yet updated.
So those 3 areas, if I can respond. First, going concern, it's worth pointing out, we're dealing with 18-19 accounts. But the span of time we're dealing here with is nearly 8 years. Because 18-19 accounts with a prior adjustment, we had to get detailed valuation and deal with 16-17, 2 years prior adjustment. So the going concern, when we're talking about going concern, how complex this is because we have not signed the accounts, is when you take 16-17, that is year which we had to go back and adjust the accounts. And then we are talking about the latest cash flow we submitted, John, was March 2025. So just imagine 16-17 to March 2025. And we're talking about 18-19 accounts. This is how demanding, how complex it is. So that's what I'm saying here. Just to mention, we have provided the going concern over the 1920, 2021, 21, 22, 22, and 23, all along the process we have been. So when you come to July 2023, yes, the further it takes to sign the accounts, the further the going concern and post-balance sheet will be. So I think it's substantially, in our view, it was provided. If there was any gaps, then the going concern. Right now, if you talk about going concern, the next 18 months might take it to December 2025. So it has been always something, and post-balance sheet event, there's always post-balance event. So I think what members I'm saying here is we're talking about 16-17 up to March 2025. This is how much we are looking at, and just referring to 18-19. And I fully understand is EY has got the responsibility, and absolutely, because 18-19, but just for members to comprehend this is the span. And between that, we have to produce all accounts, budget, and everything. So that's the point. In terms of the issues which was raised between July and the event where EY have issued their draft audit report, I will like to take through my report, and then it will be a bit much clearer. So, as I said, yes, you have to put everything into context and perspective here, and that's why our report is very detailed, especially for new members. Just to take, you have to put it to perspective. The accounts. At the end of the day, we respect our auditors' views and opinion. But just for members and those who are professional, qualified, the account is supposed to give a true and fair view. And a true and fair view will have to take materiality. So that's my view in terms of what is considered as significant and material. And that's how I will take you through my report, which is coming back to the point where I say why there's a risk of misstatement. And I'll take which figures have been adjusted and which one we haven't adjusted and the reason why. Yeah. So, Janet, so thank you, Chair. So bear with me because it has been a journey. It has been a journey for us, has been a journey for the committee, all members, new members, and now independent members. And we've got EY and the team as well. Was Neil Harris, we started and has changed. So that's how for our new chief accountant, the old chief accountant left. So there has been a lot of changes. So we have to put it in perspective and context. It was not just, we're talking about 8 years. So the first on page 147, the purpose is to update the audit committee. And quite rightly, we had a couple of draft of annual audit inspection. It's called annual audit letter, but now we've got more or less the final version, which was issued 18th of March. And we are supposed to, as an audit committee, sign off the final accounts with the audit opinion, and that's where we are. The accounts in itself has been submitted on a couple of few occasions, but there were things which you had to deal with those accounts, and there were things like prior adjustment and everything we had to deal, and there was some things which EY wanted to be disclosed, and we disclosed, but there has been a bit of a challenge for us in terms of having resources in the same way EY had issues with resources as well. So on page 148, just for new members, take you through what you've gone through in terms of the development of the current position. So first, 1819 accounts, although EY was saying there were some issues in terms of going concern and valuation. We'll come to the valuation of the airport, but then the major issues in terms of those issues which have been raised after July 2023, that was not raised at that time. And that's what I was saying here, the new issues which we deal with. Then what happened is 1718 accounts were signed. It was not qualified. 1819, and they're just about to clear a couple of those issues which normally will happen in the normal course. And then we got hit by COVID, and quite rightly, COVID, and we all know, had a big impact on the council. So, and we had to go and we had a big gap in our budget because of COVID, and we lost quite significant dividend from the airport. And we all know after COVID, we had the emergency budget. The airport operator and then the concession agreement issued a special force majeure. So there was a lot of discussion, consultants being involved and lawyers being involved. And we have kept our auditors informed. And quite rightly, with those things which were outstanding, it was not easy for us to demonstrate that the council is going concern. And it was the case for a lot of companies and a lot of council as well. So, and that's why the FRC, you will see in paragraph 9, clearly said to auditors, right now, unless the going concern issue is addressed, then there's no point of issuing an audit report. And we had to prepare an emergency budget to demonstrate that the council is a going concern. And we had to prepare a budget with an emergency budget delivering 24 million of savings. Then we had to conclude the special force majeure with the airport operator, and that was done on the 28th of June, where we had to bring a report to the executive, and that's as well we have been discussing with our auditors to make sure that a special force majeure event and what was concluded was delivering best value for the council. So that's the journey we went through before we can even get close to the accounts. We couldn't finalize the accounts unless all these issues have been resolved and can demonstrate the council is a going concern. We managed to prepare our budget all along without recourse to reserves. So even 23, 24, 24, 25, we prepared the budget without any recourse to reserves. And that's to demonstrate that what the council went through when we had the emergency budget. And since then, we have been. It's a challenge in local government, but so far we have managed to deliver budget without. In future, we are working towards the medium-term financial plan. Then since then, once we hit June 2021, where we've stabilized the airport, we've stabilized the council, then there were further issues which were raised. And that's come to the valuation. And the valuation issue, because when we put the stabilization plan, then the question was, we believe, myself and we're preparing the valuation for the establishment plan, that the value of the airport was much more higher than what was disclosed in the balance sheet. And that was discussed with our valuer for LAL, and was discussed with UI as well. And eventually, after a lot of discussion and providing evidence and everything, it was agreed that the value of the airport at that time went from $500 million to, I think, 1.4 billion. So that's a big, big adjustment in terms of the accounts. And we had to produce 3 years detailed valuation in order to demonstrate to our external auditors. And that's based on RICS valuation, which is Royal Institute of Chartered Surveyors, to demonstrate that the value is what the value should have to be disclosed. And after that, we had to change all the prior adjustments, 16, 17, and 17, 18, to reflect the valuation. So we had 3 years valuation done. So the point I'm making here, all along, these are very technical, complex issues which you have to do. Then after that, EY raised another issue, which says on page 12 OB, and there was an adjustment which was done in 2005, 2006. And we were at that time 2023. So we have to go and look at those adjustments, and it was done at that time, and to provide the reassurance to EY as well, and what the course action we have to take. Then we had on 20th of June, that's where we're getting close to the having a set of accounts, and then we had going concern, which you have to demonstrate. So going concern was all along 18, 19, 19, 20, 2021, and all along the council have been preparing the budget and have been preparing their draft accounts and have been preparing their statement of accounts and have been delivering services. So over all these years, the council have been a going concern, and this is proven the fact that we're still here and we're delivering all the services. So, but still, we have to demonstrate to our auditors that we are a going concern. And we have been doing that all along until we reach June 2023. Then we had to prepare another set of cash flow and update some of our sort of narrative and going concern note. And that was done in June 2023, where we set the cash flow for March 2025. Then we had that audit committee on the July, where quite rightly Janet is saying maybe there's still more work to be done, but substantially at that point, there was two issues which we said we are going to agree to disagree. And those two issues, coming back to the point you're saying, the statement was the question of development consent order. On the development consent order, all along the 4 years, we agreed with EY that because LAL had two auditors, and they are of the view that the DCO hasn't to be impaired, but EY, as our auditor, had the view that part of that, from an accounting point of view, has to be impaired. So we took a view from a group point of view, based into our auditors, based on the opinion issued by two auditors, and we took a view that that opinion issued by our subsidiary auditors and the expert from our airport company. And that's the reason why we didn't adjust. So on that basis, we agreed with EY that there will be a limitation of scope on that. So we say we agreed to disagree basically. We mentioned about infrastructure assets, and you will see later when John will going to present about the consultation on future audit. Infrastructure assets still something government and National Audit Office and CIFA are considering how we can deal with this issue. So this is quite a national issue. A lot of councils are facing this issue. So again, on this one, we said, because it's 18-19, why don't we put another limitation of scope? Because we're already moving in 22, 23, 24, 24. So going back and making adjustment 18-19. So there as well, we agreed, okay, whatever it takes, but let's put a limitation of scope. And that was more or less where we left in July 2023. And quite rightly, Janet is right when it says it will have to go through their consultation process. But because of the field audit and the team of Janet and Simon, how much we've worked, I said probably that's where. And we were here, Chair, and we said if we have to set up an emergency audit committee in August or September just to sign off the accounts, that was which was discussed, and those have been minuted. And then on 5th of October, we received a response from EY to say they went through the consultation process, and rather than having a limitation of scope on those two key areas, plus the value of money we've agreed, then the draft, which was circulated to us, say EY will be moving from limitation of scope to disclaimer. And the other thing which we discussed with EY was, okay, and I've been saying all along, you've got the council accounts, and you've got LAL accounts, and you've got the group accounts. There's three different things. But then when we receive, and all along Robin is here, we have been meeting with EY regularly, and we said, but let's understand that July we thought it's going to be a limitation of scope, but then from then it becomes a disclaimer. So the bit which was raised here, and that's why Janet mentioned, is there will be further works on the going concern. Yeah, we provided the information which we think, based on our sort of knowledge, is appropriate and to do with the going concern. And as I said, for the last 5 years, the reality is the council has been a going concern. So every time we come closer to finalizing the account, we have to give another 12 months, another 12 months, another 12 months. So since 18-19, the reality is we're talking about 18-19 accounts, and we are here March 2024, the council is a going concern, has been a going concern. But now we're talking about the next 12 months, but local government finance is becoming challenging. So those are the things which we have been saying, yes, we can discuss, we can look at those areas. But then there was one of the things which was brought in the after the July meeting is that there's another new item. And that's another new item is, okay, based on the EY records, the intercompany balances and certain breakdown of LAL figures, they haven't received that. And that's after 3.5 years. It's here. But that as well, I was on holiday. When I came back, we provided those information as well. And that's in regard to the subsidiary accounts, which was not raised over the last 3.5 years, was raised when EY came back after the July Audit Committee. So those you will see in my report on page 153, where it says on paragraph C and D, those are the two new issues. So those two new issues, and we find it difficult to comprehend. I'm not saying EY, I respect EY opinion, but I find it difficult to comprehend that between a limitation of scope and then having two new information, the going concern, yes, we have been providing, but you can provide more if necessary, but the intercompany transaction, which you provided as well, so you will see in my detailed response, those were provided, I think, in November when I came back. But since then, the position has not moved. And that's where we are in terms of why we've got this disagreement. And the disagreement is, if you look at the main issues, which are the DCO and infrastructure asset, we've agreed all along. And we said you have to put a limitation of scope. We agree. So we respect each party's opinion. But then the two issue was infrastructure asset, we agreed, and DCO. But the other issues was in terms of the intercompany balances. And I said, yeah, even after 3.5 years, it was raised. So that leaves us in a position where we are a bit but difficult for us to comprehend from a council point of view after spending so many years and spending quite significant amount of, you will see the audit fees on page 20, and to have a disclaimer which is not the two areas of DCO and infrastructure that we have been agreeing over the last 3 years, that we agreed to disagree. But in terms of the intercompany transactions, which you provided evidence, and the going concern, which is we set up a cash flow, but I think, John, we've sent up into revised going concern statement as well, plus narrative. Now, point I'm making here, we've come a long way. Those significant amount, which is valuation of the airport, the 3 years prior adjustment, there were things about Central Park Access Road, the infrastructure asset is a national issue, dealing with going concern, dealing with a special force measure, preparing budget, emergency budget, going through deluxe and everything. All these have been done after COVID in order to make sure we provide reassurance to ourselves, to the audit committee, to the resident of Luton, and to our external auditors that the council is a going concern, and we are doing whatever we can in very, very difficult circumstances to make sure we prepare a set of accounts which reflect what we have been discussing. So those are the big issues. And the one which is about the revaluation and deferred action, those are the big adjustments which was done, but that as well is positive. I.e., it has increased the group in terms of the surplus. So that's why we have been having this discussion. And just to point out here that for members' attention, I think it was raised at FRG, we've lodged a formal complaint about the way things has happened over the last 4.5 years. And then we have got a response from EY, but it was received on Friday. So Chair, the Chief Executive, myself are going through that, but at this stage, I won't be in a position to go into the detail. So we are in this situation. We all work together. We all work with members, with EY ourselves, but we come to a point here where, from a council point of view, it's very difficult to comprehend that we move from in July and suddenly we've got the disclaimer of the whole accounts, including the council and the group together. And if you take into context, the LAL auditors have not qualified LAL accounts. So the recent accounts, their accounts is being audited regularly. So you've got the subsidiary company accounts have not been qualified. So the council accounts, so far I've requested what are the significant adjustment which potentially is the council accounts. I don't have a list because there is an adjustment I can consider. But when you put both accounts, then suddenly we move from a limitation of disclaimer, and we find it difficult to comprehend. So that's a bit a detail, especially for new members, because other members have been with us in the journey, but for new members to understand, I just put into context. We're talking the time horizon 8 years for an 18-19 account. Yeah, even central government has moved, starting to say, because of backstop, which will take you later, is central government saying, just let's move on, because the 23-24 account is much more clear, gives a better view of the position and performance of the council rather than an 18-19 account. But having said that, 18-19 accounts, we've dealt all the issues we've said, all the major issues we've dealt in work. We are grateful to you. I work closely together. A lot of issues which are left is very difficult for us to comprehend. So thanks, Chair. It's a bit of a long year, but it shows the journey we have been through, and just for the information of new members, just for you to comprehend where we are.
Janet, do you want to come back before I open up the questions to the members? You okay? Okay. Questions, Councillor Hussain?
Can I ask you, and I had the privilege of listening to this for a number of years, but for a member's point of view, both sides, professionals, have given a very long, detailed concern. Can you just, for my understanding, give me number of issues that concern the EY and you have got? Where are we at this position with a bullet point, please, one page, right, which can tell us where do we have a major concern from 18-19 to 22-23, so that what is the way of resolving it, be that may value of the asset, be that may the DCO, be that may all the issues you've gone in a very long chronology. Yeah. So if we can get a better understanding of that, in perhaps in layman terms, and the two accountants arguing with each other, and members are saying, well, where are we going? Where are we heading for? When do we see these issues resolved? Because I have heard it for 4 years. And this continues to be a serious concern that we cannot agree the two professional sides between Luton Council, and I'm being slightly impartial rather than taking side with local authority or with Ansel. Yeah. Can you please? Yep, thank you.
I think if I can refer you to the page in our report, which is Appendix A and the audit report. Now, as auditors, we are looking to form a conclusion on the audit, and we got to a position in July when we had received 5 versions of the accounts in the previous year, all of which had material errors in them. And having identified those and talked to officers about them, they remained or were corrected, but corrected incorrectly. So we have set out in our draft proposed audit opinion the 5 areas where we feel we haven't got sufficient assurance over that long period of time. So those are around the development consent order and the appropriateness of including those as assets in the accounts, the fact that the accounts don't reflect events after the reporting date. Management haven't looked at those, assessed them, and then reflected those accurately within, or the impact of those on the accounts. They haven't included an up-to-date going concern assessment. They have a confused and inconsistent set of information in there, and we have raised that over a period of time. We don't have sufficient assurance over the LAL balances in those accounts. And we don't have sufficient assurance over the infrastructure assets as presented, and there are inconsistencies in the way in which those are reflected in the accounts that were presented to us in July 2023. Now, we said at that point, we are going to stop and consult internally. Auditors have a view, have a requirement to look at how many areas they have insufficient assurance over the accounts, and where there are two or more, according to the international auditing standards, we have the ability to consider that that is too significant for us to be able to form an opinion across the accounts. We have 5, and therefore we, in consultation internally, said 5 areas means that that is too significant for us to be able to provide even a qualified opinion. I'll just say about the infrastructure assets, that is a national issue, but all other authorities where I've signed the accounts have been able to apply the statutory instrument and have a clean opinion on that. Luton's issue is that they have not been able to apply it cleanly and give us sufficient assurance. And I think that that has been misunderstood over the period that we've been discussing that with officers. So that gives you an indication of why we think that this is a problem, and that is because we think that officers have struggled to understand the significance of the issues that we're raising and to address them sufficiently well in either providing us with sufficient appropriate audit evidence or preparing a set of accounts which actually reflects their financial reporting responsibilities. So that in a nutshell is our position. I hope that's clear.
Councillor Hussain, do you want to come back?
Yeah,
or?
just I've got that pretty clear. I've also heard the response from Deb, which was very robust in trying to give you all that. But where does that independent opinion comes into it? Do we have a, somewhere along the line, somebody gives an independent opinion between the two sides?
So our responsibility is to conclude on our audit procedures and to propose an audit opinion. And we have concluded on our audit procedures, and we cannot issue our audit report because the Audit and Governance Committee has not approved the statements as they currently are prepared. So we are in an impasse. We can't report unless we hit the backstop date, which is under the proposals of DLUC, at which point we would report.
You want to?
So thanks, Chair. I think those 5 issues were mentioned over the last 4 years. Yeah. So those issues are not new. The only issue which was new was what we're saying, management have not provided them with sufficient appropriate audit evidence. Janet mentioned about things which are not factual in my response, but this is not factual because those information were not asked over the last 3.5 years. And if you look at the report which went to the audit committee on the 7th of July, clearly didn't mention that intercompany balances we have not provided audit evidence. And that was in that 7th of July. It came after 7th of July when the file went to the standard. So my question here is, when you're talking about 5 issues, the issues which are raised on 7th of July, subject to going concern, which I've said skip on. I've got email I said to Janet, how far do you want me to update going concern? Every 3 months I can update going concern. But the bit about the infrastructure I said, I've clearly had a discussion. I said, if we want to sign the 18-19 accounts, let's do it. And if infrastructure assets is an issue, let's put a limitation of the scope, because I want to move to 22, 23, 24, 24, which were quite more important. And in the meantime, when we're doing 18-19, we're doing 19-20 audit as well. That was happening. So our resources were stretched. I said limitation of scope on infrastructure. So let's move on. But just to point out, there's other issues, but we've agreed those issues over the few years. And the report, which is 7th of July, clearly says on, I think members have not seen this on the first one. And it says infrastructure asset, we agreed to issue a limitation of scope, and DCO, we agreed to issue limitation of scope. And for the DCO, why we could not agree, because Lalo auditors clearly said they agree with our treatment. Now, when it comes to the valuation, which is on your page 152, paragraph C, that as well in this report on 7th of July clearly said that will put an emphasis of matter. So EY agreed with the valuation within the range, but they wanted to put an emphasis of matter on the basis of valuation. So that report clearly says it will be an emphasis of matter and not a disclaimer. Then infrastructure was limitation of the scope. The new things which was brought was the intercompany balance of the 3.5 years. And that as well we provided, and you've got in my response, we provided, I think, when I came back from my holiday in November. So something which was raised 3.5 years after the 1819, first time from EY, and we provided those. So, and you will see my response, Councillor Hussain, is on page 153, dealing with all these items. In terms of the DCO, in terms of the valuation of the airport, in terms of the infrastructure asset, these are the things we have been constantly discussing with EY, and we agree on the treatment. So there's no new issue. The two new issue is the intercompany balance between the airport and the council, and then the going concern. But the going concern and post-balance event has been something which has been a moving goalpost. It's not something which was static at one particular point in time. And in fact, at one point you will see in the report, Mal even talks about issues with the airport car parks fire. And that's as well we have to deal. So the post-balance sheet event, tomorrow there might be another event in the council, it become post-balance sheet. So it's always a moving goalpost, and it's not easy to keep track. But the main issues which we have been discussing over the last 3.5, 4 years are development consent order. We agreed a long time ago. Infrastructure asset, we agreed a long time ago, agreed to disagree. Valuation of airport, that has already been dealt with. We've agreed with EY a long time ago, and those two. So when I look at all those 5 issues, 3, we know where we are, and EY, yeah, and that was in the 7th of July. So since then, suddenly, after July, in October, when we received this letter, it was very much a bit of a surprise to us. I'm sure EY will have what was discussed at that standards panel, I don't know, but it just came a bit of a shock when we were just about to put an additional committee to approve the accounts, and we were here, and everything was raised, members raised, everything's okay. And suddenly, yeah, so it's very difficult. It's very difficult, and you will see the fees which we spent, and to get a disclaimer of audit report. I'm not saying I'm not the auditor. At the end of the auditor will issue the report, but it's very difficult after what we've gone through, and then receive a disclaimer on those couple of points new, which was raised after we went to the audit committee, and it's very difficult to yeah. And that's just to give you, Councillor Hussain, is that's where we are. And if you look at page 150 and our response 153, it's clearly mentioned those things. Thank you, Chair.
Councillor Malik, you had your hands up.
Dave, I have a question to you. The things they have raised by EY, the problems, we are facing from a couple of years, the accounts are still not completed. My question is the opinion and the suggestions they have given to us to improve for the future services and, all the procedure we haven't faced in future. What type of things we are working to resolve these issues?
So I think I would refer you, Councillor, to page 154. And it says, paragraph G, Roman letter 1 to 10, what we've gone through. And I don't expect the finance department will have to go through this again, because I won't have the energy to go through. So, and that was starting with a COVID emergency budget, capital direction, review from MHCLG, and reassurance to provide with a special force matter. Those are the things which is not common. What you have to go through, any finance team in UK would be stretched to the limit to deal with all these issues. So coming back to Bowen, you've learned a lot of things. A lot of things is how you deal with COVID, how you deal with MHLD, get capitalization, deal with a special force measure, deal with valuation, prior adjustment, 3 years. It's the list goes on. And we managed to do that. And Janet knows we had a couple of staff in terms of closure, and John joined us 2 years ago. So since COVID, I had agency staff. So despite those, we have. So the lessons learned, we cope. Yeah, we're not a perfect world. If I had an army of people with technical skills, probably would have coped better. But let's hope we don't go through that again, because I won't have the energy to go through that. So the lessons learned is we manage, but we hit another similar situation. I don't think any council, any company will be able to cope if we have another COVID event. So it describes during all these 4 years, we had to prepare the budget, we had to prepare the statement of account draft, we had to make sure council carry on delivering services. So it takes quite a lot here. Yeah. So if there's any things which maybe it's not the perfect job, so we managed to do our best, but given the circumstances, I think I'm proud for the team, what we've delivered. But if there's anything which have to tie up some loose ends here, whatever, the big, coming back to Councillor Hussain, the big item, which is development consent order, infrastructure assets, and the valuation, we've dealt with that long time ago.
Has Dev section 151 answered your question? Right. Councillor Underwood.
Thank you, Chair. I've got a question for UI. On the events after the reporting date item, Council's response to your to that issue is that the narrative report has been updated and reflects the latest going concern assessment. If I remember right, you were saying that the narrative report is not the appropriate place for those updates. Is that correct?
So the narrative report sits in front of the statement of accounts. So we provide our auditor's opinion on the statement of accounts, and that should have the basis of preparation of those accounts, and it should set out the risks around going concern and management's assessment as to the basis of that, and it should include sufficient details to be able for a reader to be able to understand the cash position, the borrowing position, the forward forecast position. The narrative report can include some discussion about that, but we consider that as other information within our auditor's report, and so we're looking to make sure that that is not inconsistent with what's in the statement of accounts, and the statement of accounts is inconsistent and out of date. Ongoing concern.
Okay. The council's response goes on to say the post-balance sheet events have been constantly updated as the audit has been progressing. Is that not the case?
That's a different note. That's about events after the balance sheet date, as opposed to going concern. So there are two different disclosure requirements, neither of which are up to date and consistent or supported by management's assessment in the set of accounts that we were given in July 23.
Okay, thank you.
You want to come in? Yeah.
Thank you, Chair. A question to both our finance team and also the external audit team, that there is a significant disagreement with valuation of assets. Is it ever thought about that what the benchmark is used by other airports in the country, and whether any external valuer can be used for those to overcome the situation? Thank you.
Couple of points. We don't have a disagreement on the valuation. So the account is not being disclaimed on the valuation. The only thing which EY has brought, because there's always a range, coming back to your point, you can have two valuers, but you can have two, yeah. So there's no disagreement. It's just because the valuation is so significant, there's an emphasis of matter, because as you quite rightly said, you change one variable, the valuation can change by 100 million. So there's emphasis of matter to draw the reader's attention. You say, be mindful, there's a big valuation here, but it depends on certain parameters, and if you change those parameters can change. So there's no disagreement between us or EY, but the valuation every year, the valuation can change. Coming back to the going concern, we are covering 8 years here. We have been updating going concern. Myself and Robin is on the other line. We've met with EY on June, and I said to EY, we can update the going concern. And the response was, Dave, we are taking to our standards panel, don't keep changing, otherwise we won't be able to finalize that. So the understanding was when EY will go to their panel and Robin can respond if he wants to come in, to say June, and since June, nothing has been done. All the information you have provided, we haven't received. Infrastructure assets as well coming back, I provided the detail, and you will see on page 153, I get advice from our external advisor as well to say how we're going to deal with that. So it's not that we have not done doing, we've got our external advisor as well saying how you deal. So we agreed in June that will stop, because if there's more delay, right now we are in March now, we have to do another post-balance sheet and going concern. And if we go to June, then we'll have to keep on updating. So we came to a point to say, and Janet said in June, we are taking to the panel now, please don't do any further changes, otherwise we have to audit that as well. So that was an arrangement which I'm sure Audit, Robin went, yeah. And that's why we did it update it, because we can update the accounts being under the set of accounts, and 3 months there's a fire at the airport and we have to update, and there's something else, we have to keep on updating the accounts. So we say that appropriate time, once they go to the standards panel, it'll come with a definite audit draft, i.e. agree on the audit report, then we can update it and bring a final accounts for the audit committee to approve. And that was supposed to happen in September. Otherwise, every 4 weeks, I can sit down, just updating the account is going concern and value from on post-balance sheet, because those are the things. The big ticket item is the DCO, we've agreed long time ago. Valuation of assets, agreed long time ago, so there's no disagreement. And in terms of the infrastructure as well, we agreed. We say, who will be looking at the use of accounts and infrastructure asset? We're talking about valuing the road, the tarmac. And so from a user's point of view, whether that tarmac is worth 5 million or 10 million, and the value in 18, 19, what value it will bring to the users. And spending money on audit fees, quite rightly, those we audited, they said, if it not bring value, let's put a limitation of scope and move on, because 20 to 23 value is much more closer. So, and that's where we left. And Robin is there. If Robin want to join, that was understanding that since June, we won't be changing the accounts, and finally we bring something to reflect everything. But then when we had this, is the audit report completely changed. So we haven't updated the accounts since then, because we don't know what update needs to be done. Thanks, Chair.
Janet wanted to come back.
Thank you. Just on the point about asking officers to stop providing further iterations of the draft financial statements, we had received 4 versions by June, and we received another version on the 16th of July, 2023. This is in the last year. And we provided detailed feedback on those corrections that were required. So we asked them to stop providing further iterations of their accounts, because they had not been able to provide us with accurate, complete and consistent draft accounts over that period. And at times it was our view that officers were seeking to rely on the audit team to do their work for them and update or rewrite sections of the accounts for them, which is a threat to our independence and indicative that officers were struggling to produce consistent, complete, correct accounts. So we asked them to stop so that we could go to consultation.
I think everybody, Helen, you haven't asked any question. Do you want to ask any question on NASDAQ?
I did want to highlight, I've been in a position where audits take a long time, and I have the hugest sympathy for the finance team in that. I really, really do. It is a lot of work. I have sympathy for the auditors in how long it takes as well. It's not good for anybody, and the system has got to get back up to date. I think we're all in that position. And I think it's just a case that I've read, your line is drawn, EY. Is that correct? Your line is drawn. Nothing you have heard from today or the representations or the conversations will change that. Is that correct? Your line is drawn. And so you won't issue your opinion until such time as the committee has reviewed the account, well, given their opinion on the accounts. Is that correct? Okay. So I think my question then to us and to the officers is, are we intending on having a set of accounts that will come here that we will consider and have to take a view on, knowing what the outcome of the audit opinion is going to be?
Remember, we have brought those accounts to here. The question is the audited part. Every deadline for every year since the pandemic, the accounts have been presented. The question has always been, and I think this is my third year on being on this committee, is about the audited accounts. So everything that we've had to publish has been published, is on the council website, is just the audited bit. So if I've missed anything on that, is that okay, Helen?
Yeah, can I just clarify then, EY, what exactly are you waiting for before you issue your opinion then, please?
We're waiting for the Audit and Governance Committee to approve a set of accounts. The last version that we believe were brought and noted were in 2022, since when the valuation of the airport has moved from 565 million to about 1.3 billion. So there are material changes in the accounts. The going concern note in the version that we have seen for July 23 referred to the going concern period to June 2023. So I don't know which version you want to have a look at, but the last version that we looked at was June 2023, and that's the basis on which we have our opinion drafted.
I have.
Sorry, I think
Go on, Kath.
I got a bit confused there. You mentioned June 2022, then you said June 2023.
So I believe that you should ask officers. I believe that a version came in 2022 to the committee, but wasn't approved. We've since had 5 other versions of the draft accounts, but they haven't come to committee. So committee has not approved the materially different accounts from and I don't believe that they were approved when they first presented in June 2019, because we went back to have a look at the record. But Dev may have a different recollection, or he may have found a different set of minutes that says they were approved in that period.
I'm at lost. I'm going to say as being chair, because every minute is something new. I'm really sorry and I apologise to the independent members, because I've been here for 3 years. So I wanted my colleagues to contribute to this. To hear now that we're waiting for the audited accounts for 2022, 2023, I'm totally flabbergasted, because it has been, for me, something new. There's been something new. And who's been here? Councillor Underwood, I think you've been here as long as me on the committee. And I have to say, I don't take any reassurance that there's going to be something else coming up. What I want with dearness is for us to move on. And that is what I'm struggling with. I know that the sector is struggling with capacity. I know that the auditors are struggling, because I actually went to the Eastern Region Chair of Audit and Governance. And you, Helen, knows that there is going to be the start of September 2024, where there's going to be a standardised wording to be used by external auditors with regards to the backstop agreed, no matter what. So I'm absolutely professionally flabbergasted as to now to hear 2022, 2023, they are waiting for. I am absolutely, and I know my memory ain't brilliant, but it's usually quite good on these sort of things. Do you want to come in, Helen?
I do apologise, because obviously being new, I'm just trying to clarify. Is it 2018-19 June 23 version of accounts that you were waiting to come to this committee? Right. And that they haven't come before.
Come back, and I think it's really appropriate that the chief exec, who's been on this boat ride, may want to come in after Deb, because I'm getting a bit flabbergasted professionally why there's something new. Oh, and can the minutes be crystal clear that what EY is asking for? So make sure the minutes go to EY. So we're not saying you said this then. Yeah, that what they're asking for is for the 2018-19, but as of the end of the financial year 2022-23. Have I got that right? Between Janet and what my really valued independent colleague brought in their contribution tonight?
I think, if I've understood this correctly, it's the 2018-19 accounts, the version that is as up to date as at the end of June 23, the last version you received. Is that correct?
And that will deal with all going concern issues, all that. The value, because can you spell it crystal clear, the valuation? Because what it was on the assets as of 2018-19, before we dropped into that pandemic, I know it's going to be valued differently in the financial year that you're talking about. And will you then have to do another valuation and look at the past paper, and Horsted and cow fat need to happen?
So the 2018-19 accounts were presented to the Audit Committee, as I understand it, in June 2019 in draft. 4 years worth of audit work has taken place, and a version was given to us in July 2023, on which we based our draft audit opinion that you have in your papers in our report, which points out 5 areas where we haven't got sufficient audit evidence because of inconsistencies and issues within those accounts. We cannot issue, we have concluded our work, as Helen has said. We cannot issue our audit opinion until those accounts, whichever set of accounts you choose for 2018-19 are issued. But we understand that the latest version that we've looked at was prepared to reflect the position for 2018-19 with up-to-date information per officers in July 23. So those were the latest set that we had seen.
Just I have served on most of these years from 18-19, and if you remember, I did ask these questions roughly at that time. So what I would like to see is that these are the minutes that we have got throughout all the committees that you are raising. We can go through the minutes and all the questions and all the agreement. Where we want to come to now is to be clear where the auditors are asking from the local authority, come to a conclusion of those accounts 18-19, 22-23, to be able to clear the issues and concerns. Have I got that right or not?
So
am I now going back to the start in another?
You're on to the next paper. So we're talking about the 2018-19 draft statement of accounts at the moment. You're absolutely right, though. The next paper deals with, and what do you do with the years after that that take you to 22, 23, which we haven't moved on to yet.
Section 151 officer.
Okay. Janet keeps on referring to the 5 areas. Those 5 areas are not new. There's only one area which is new there. So when we say 5 areas, 4 years we have been discussing 5 areas. First area, development consent order. Long time ago, we've agreed there will be a limitation of scope. So that area, there's no disagreement. We agreed to disagree because 2 auditors from LAL clearly agree how to treat that. And we, from a group point of view, we're just going with the way the 2 auditors, plus we had the expert advice from AROPA as well. So that's first area, and we've agreed. So out of 5, become 4. Then the valuation of the airport, that as well we've agreed. So that was another area. Infrastructure assets, we've already agreed, maybe even before July, to say this will be a limitation of scope. So to say we are disclosing or not disclosing, we've already agreed with the limitation of scope. So that's an area we've already agreed to disagree on that one because government is still consulting on how it's going to be treated going forward. So if we take on page 152A, this year, numbers we have in here, we have agreed. So it was not an issue. It was an issue because we agreed to disagree, but we say on that basis limitation of scope. Infrastructure asset, the same. We said, let's move on because we are getting into 22, 23. So let's agree to discuss on the third one because even government at that time was still not clear and CIFA was looking at how we are going to deal with those. So then it comes to the C, and that is the one which, coming back to your point, which we feel strongly, it says management has not provided with sufficient appropriate audit evidence to support material LAL balances. This was never brought up. This was only brought up in October, I think. So 1819 accounts, October 2023, and that's C. And it says management has not provided. It was never asked for management to provide. When the audit was done in 1819, EY practically audited LAL figures. And that's one of the reasons is the audit fee. So EY audited LAL figures, but those were never raised over the last 3.5 years. It was raised back in September after the June 23. But despite this was raised after 3.5 years, when I came back from my holiday, I look at those intercompany balances, and you will see in my response, plus the breakdown, and I've provided. And I said in my email, and it says here on page 150, proof of evidence of LAL transaction which have been raised after 3.5 years of the audit process was sent to EY, but unclear whether they have been fully reviewed by EY or not. We haven't heard anything. So made a request in an audit draft to say these intercompany balances have not been provided, and we provide the information, we don't hear anything. So those are the things we are saying here is when we prepare and present a report, when Janet is saying that account will have to come, and if EY say stick to the point C, and we're saying but it was raised 3.5 years, we provided, whatever report EY has to reflect what is fair and factual. So intercompany balances raised as a query after 3.5 years, we provide the evidence when I came back my holiday, and that paragraph is still in the report. So it's very difficult for us to accept something which already provided the information and it's there, and Jonah as well, both of us work on that, but just to leave that as a comment to say management have not provided them with sufficient appropriate audit evidence to support material. When I provided this, and Robin sent that information as well, if they say, look, the evidence you're providing, but that's not sufficient, complete or accurate, fine, we can, but we haven't had a response on that. So that's a bit challenging. Let's get to the bottom, coming back to your point. Let's get to the point. Let's see what we is factual, is fair. Let's see there is an area of disagreement, then we can deal with that. But some of the things which was brought and we provided, but we haven't even, some of them I will look at the going concern, which was the statement, not in the accounts, because the accounts, we can bring the accounts. We can bring June, we can bring December, we can bring March. At least you resolve those issues and really understand where EY stand in terms of the audit report. Then we can just update all the accounts in one go and complete it. But if we provide some evidence which is requested by EY and put in their audit report, and those evidence are not reviewed, we don't even know whether they've reviewed or not, and just the management has not provided, that's not a fair reflection of the reality. So those are the things that I'm saying is a bit difficult for us. But when you are providing evidence and we see the report evidence have not been provided, which was not asked 3.5 years ago. So that's the thing which is saying, let's clear some of the, if there is something which is a misunderstanding or something which is not clear, let's clear that, so that is both of us as professionals can stand to say something which is more robust and can be evidence. We don't get everything right. Of course, we don't get everything right. Nobody get everything right. But some of the things which provided, let's look at those and say whether that is sufficient or not. Thank you, Chair.
Thank you. Oh, okay, yeah. Before I forget, because the pack code is getting a bit tight now. Oh, I should have said that. The value for money statement we're missing. I don't know how many. I think we've got at least 4 years. This is something that we spent a lot of time talking about the accounts, and the financial years has kicked on and we haven't had that. So I'm going to let my colleagues come in, and then I'm going to go to you, Janet. I'm going to let Robin come in, and then we're going to wrap up. Yeah, but I want to know when we're going to get the other stuff that we are paying for. Yeah, the value for money. Yeah, please. Thank you.
Just 2 things from me, Chair. One is that we have received the information, the PEC for this meeting on Saturday, the hard copy, and the soft copy was given a little earlier. In future, is it possible that we can get the information like approximately a couple of weeks before the meeting date? One thing. And the second thing is the disagreement with those evidences, whether EY can make a list of the evidences they need, and then the finance team can produce those evidences, and they can be discussed in probably a special meeting, so that those disagreements can be removed and we can move forward. Those are the 2 things. Thank you.
That is very constructive. Janet, can you come back with regards to the value for money, please? Thanks. Let Robin in.
So if I refer you back to the Appendix D in our report, which sets out the reporting and correspondence with management and the Audit and Governance Committee, you'll see that in every single one of those reports, we refer to the value for money arrangements. The value for money work that we do is a constant assessment of the governance arrangements, the financial standing of the organisation and the use of information. And so you can see us reporting by exception throughout the period on where we saw the risks and significant weaknesses within your value for money arrangements. So far be it that we haven't been doing it. I think that is, I'm afraid to say, inaccurate. We have been assessing that as we've been going on, and we have been reporting as it's shown in Appendix D. We've been reporting by exception. So from our perspective, you're not missing anything. Our responsibilities as we get to the end of 22-23 appointment is to provide you with an up-to-date summary of our assessment of your value for money arrangements over the period that we've been your auditors in line with the NAO consultation, and that's what we intend to do.
Thank you. Robin, do you want to come in?
Yeah, thanks, Chair. So just a number of points. Number 1, just to confirm, I was with Dev in the meeting in June where it is discussed and agreed that we would stop updating the documents. Number 2, Janet stated that we've had detailed feedback after the 16th of July. That's not correct. We haven't had detailed feedback. Number 3, the Luton taxpayers spending a lot of money on us. You've got 3 partners sat in front of you this evening. God knows how much that's costing us this evening for what is or has not yet been a productive and enlightening evening. And it hasn't been because over the period there has not been a consistency of approach from Ernst & Young. Resources have been patchy, and I think that Helen hit it absolutely the nail on the head. Ernst & Young have taken a position and despite the evidence won't shift from it and really are looking for reasons to further substantiate their position. As Dev said, what we're focused on is a fair and factual position, and we do not believe that we've got that. And we don't believe and haven't, despite the fact in every meeting I've been in, I've asked for a plan. I've been in 2 meetings with our new auditor, and we've already got a plan that will see us get a written value for money statement, and also within a short period of time, and also an audit report by the end of this calendar year. Despite the fact that I've been in meetings with Ernst & Young for the last 3 years, I still to date haven't got a plan for either.
I have to say, this has really grieved me. As somebody who's worked in finance for 20 years prior, this has really grieved me what we've gone through as a council with our external auditors and some of their experience, because at the end of the day, we're all professionals and behind the money is the people. And sometimes we lose sight of that the money is linked to people's life, people's contribution to society. And the airport is a massive asset. And I'm sure you understand as independent, if we didn't grow the airport, we wouldn't have survived austerity. Yeah, we would not have survived. And the level of poverty that we see playing out in society and the numbers of food banks that seems to be a permanent feature that nobody has an aspiration to get rid of. That airport, our airport, have provided services, not just to the council, but to the voluntary and community sector. Like St. Patrick's Day, some areas have lost so much in arts and cultures. We have kept that in our town. We have really kept it. And I'm so glad to see the airport recovering. And I know the next generation, no matter what happened, they're having their holidays. Yeah, they are flying out and finding the cheapest way possible to have a break. So the recommendations we've got before us, if we can move to it, colleagues, I'm suggesting number 1, that we move and accept noting the external report from Ernest, that we know and we fully endorse our officer's response. Is that okay? And what I want to note that we note the concerns raised by members of both the Financial Review Group and the Audit and Governance Committee at their respective meetings over the last years, over the non-finalisation of the audit of 1819, and constantly extending the dead time label for this and different reasons given by EY. If my colleagues don't agree, please feel free, because some of us remember that. Councillor Underwood, do you remember that time you wanted to move a motion to go back to full council? I've really tried to be as patient as I can, but I want our external auditors to work with our section 151 so we can get closure and move on with life, because we only have one. I want the action taken by the council. I would like you to ratify the action that we've taken to put in the complaint to PSAA with regards to the fees. Yeah, I think it's really exorbitant and we haven't got an outcome. We haven't got something tangible to say we've got a set of accounts that are finalised. And we authorise So, and we authorise officers and encourage EY to take all necessary steps to finalise the 18-19 audit. Is that about agreeable? Or do I need to, do you want to change anything? Or have I summarised it enough for everybody, given that the minute taker wasn't aware that I was going to do this? Yeah? Councillor Underwood?
The first part, I didn't quite get the
Right, so what I've written, move and accept. Yeah, so we've got here, note that EY has provided their audit position report. And we know, so we accept the report. We can't do it, the report is the report. Yeah, and we know and fully endorse our officer's response in this. Yes? Note the concerns raised by members and the Finance Review Group and the Audit Governance Committee at their respective meetings over the years over the non-finalisation of the audit of 18-19 accounts on constantly extending timetables for this and different reasons given by EY. If you're not happy, let's have a conversation, but I want us to be as one, as an audit committee. Ratify the action taken by the council to submit a formal complaint. And authorise officers and encourage EY to take all necessary steps to finalise the 18-19 audit, preferably on an agreed basis, while seeking to provide value for money for Luton residents, including any arbitration process, contact with government departments and referral to regulatory bodies that may deem necessary by Luton Council to achieve this end. I think we need to find a way to move on. Are my colleagues in agreement? Yeah?
Chair, it needs to be resolved.
Sorry, go ahead.
I've sat on it for all these years, and I think it is time that Audit and Governance Committee has given a very clear message that there we are.
So, we've resolved, we've had a conversation, debate, reasoning, question. We're now moving on to item 13, statement of accounts, audit requirement. Thank you.
Thank you, Chair. I'll be brief given the time. So this report really covers a forenoting arrangement that the government have now given us a particular sort of framework upon which we will deal with the legacy audits of statement of accounts and those moving forward. So it's twofold really. There's two key dates covered by this, and firstly the 30th September 2024. By that stage, we're to have all audits done for what we would call the legacy years. Now, in our case, that's 5 years worth. That's the 2018-19, which we've been talking about tonight, all the way through to 22-23, and all of those years' accounts are in draft on the council's website and are ready for audit. So the expectation is that external audit will have their opinion and make their results known on all of those legacy years by the 30th of September. And obviously, we've been discussing that tonight, and there may be some issues around that actually happening. But there we are. We've got a draft set of accounts for 22, 23, and the prior years all there. And moving forward, the other step to this is that in completing the 23-24 accounts, which is a work that we've already started on, of course, and there's a matter of days left of the financial year. So we're embarked upon the closure of accounts process in earnest, of course. We're to have that ready in draft by the 31st of May 2024, and the audit for that and section 151 true and fair view sign off, etc., is required by the 31st of May 2025. So we have a framework within which we're working in terms of the council doing doing our bit within finance to get these draft accounts done and the external audits to happen. And in amongst that, there's also information about the infrastructure assets arrangements being ratified as well in terms of the accounts moving forward. So the report also covers 2 questionnaires where, in time-honoured tradition, the Department for Levelling Up, Communities and Housing are consulting on the arrangements. So that's great, and we have done our bit. We've completed our questionnaire, and that is also in the report. So we have taken part in that consultation. We await the final results of that consultation, but we expect that these draft deadlines that I've just referred to are those that are ratified, and that's really where we are. So this is an information piece, but happy to take any questions as per the report that you see. Thank you.
Any questions, colleague? Councillor Underwood.
Thank you, Chair. On top page 197, John, it says auditors will therefore need to perform sufficient testing on opening balances to rebuild assurance. Is there a lot hidden in that statement? That sounds like, is there a lot of work involved there? Does that threaten the timetable? So, sorry, paragraph 24. 24.
Yes. Okay. So this is referring to the subsequent years and these deadlines. Well, we will be working to meet those deadlines and get these accounts closed as soon as we can within the framework. We feel with a full complement of staff, we can do that. We're prepared to do that, and we've got a plan to do that for each of those financial years. It always poses a challenge. And there's always risks around matters with regard to external audit, but we feel we've got the requisite expertise and know-how within the services to achieve those deadlines.
Questions, colleagues? No? Okay, if we can go to page 193. The recommendation is that Audit and Governance Committee is recommended to note the report. Do we so note? Okay. Before you leave, I just want to say that there was an Eastern Region LGA East Chair of Audit and Governance on the 13th of March. And what I just wanted to bring up today, all the presentations that I got, I'm going to send it to Democratic Services and it will be circulated. But some of the things they covered was about the standardization of wording that will be used by external auditors in regards to the backstop that's been working on. There is the SIPFA has launched their consultation currently, so the officers will have that. That's being closed the 28th of March. External audit will need to be clear nationally as to why they give opinions that they do. There's going to be more guidance coming out to auditors in regards to the backstop. And there's a new internal audit standard coming out. So I just thought I'll make you all aware of that. And when the presentation's out, I'll ensure that they get circulated to all of you. So we all are at the same level. Thank you. Have a good journey on home and have a good week. Take care. Bye.